Welcome to Fintech CTO Talks. In today's podcast, we will talk about different lessons from statutory, internal, and tax audits across BFSI. I am Ami, and I sit down with CTOs, innovators, CEOs into the industry who is making finance faster, smoother, and much more connected. This is the podcast that goes behind the scenes with industry leaders who are shaping the future of fintech. Money moves fast. Does fintech keep up? Let's find out. Together, we will explore the codes, the platforms, and the bold ideas shaping this industry. On today's podcast, we have Sachin Mundra, AVP Financial Controller at Bernstein, with over a decade of experience across financial accounting, reporting, audits, valuation, and financial control with BFSI sector. Sachin's career includes key banks from Credit Suisse to KPMG to Morgan and Stanley, where he has worked across banks, NBFCs, mutual funds, brokers, and investment funds, gaining a comprehensive understanding of financial operations, governance, and regulatory framework. Sachin, we welcome you to the podcast.
Thanks, Ami, for inviting me. And it's a pretty brief background you have provided. And I'm grateful that you have considered me to provide some insights about my experience and my knowledge. So I'm
Absolutely.
excited to take up certain questions, and if I can, I can contribute to this, it would be really grateful for me.
Absolutely. So, my first question is, to begin with, can you share your journey and how you entered the world of audits into the BFSI sector?
Yeah, as you have already provided a brief introduction about me, I'm having a decade of experience, November 15 pass out CA, and I started my career with Morgan Stanley. Thereafter, I went to KPMG, and after that, I went to Credit Suisse, and currently I'm working with Bernstein India. So, in KPMG, I was working as a statutory auditor into the BFSI group, basically more of banking and financial service sector. Wherein I was looking for banks, NBFC, mutual funds, and PE funds and broking entities audit. So I worked around 3 years over there, and majorly I've covered bank and broking entities. Banks like Deutsche Bank, which was one of the big clients for us, and HDFC Securities, some of the key names. So audit was pretty good. It was hectic, but it has shaped me a lot in my career. And specifically working in any big four was always grateful for me. And this has helped my career to sharpen and be more polished in work, and it has supported me a lot. So
Absolutely. So when you break it, just explain technical people or, fintech companies, what do you mean by statutory audit, internal audit, tax audit, and how would it explain the difference, and what is the difference? If you could explain us into simple terms.
yeah, so basically, statutory audit is more about providing the true and fair view on the financial statements by the statutory auditors. Internal audit is more about commenting on the internal financial control by the organization. It is responsibility of the management. And tax audit is about providing uh, regarding compliance for the tax law and reporting requirement as per the Income Tax Act. So these are three different audits. Statutory audit, if you ask me which is the most complex one, definitely statutory audit involves a lot of risk, not just signing the financial, but overall responsibility about the company's overall financial position and signing off the financial statement. So statutory audit is too complex. Uh, I mean, every audit has its own role, but considering the complexity and regulation compliance requirement, statutory audit holds the most.
what makes auditing BFSI companies different from auditing companies into other industries?
There so basically BFSI and non-BFSI, the major difference is with respect to the compliance and regulations. BFSI group, for example, banks and BFC are highly regulated by RBI. Then insurance is regulated by IRDA. Then broking entities are regulated by SEBI. So there are heavy compliance regulations specifically of RBI and SEBI as well as RBI, which is not so there in the non-BFSI group, which can say, manufacturing or IT sector companies. So that makes the financial statement and auditor on a higher risk with respect to the compliances of RBI. So that's the key difference between BFSI and non-BFSI.
So across the BFSI audits, like what is more difficult, or which audit finding appears most often? The documentation gaps, the control failures, the tax issues, or are there any regulatory non-compliances? And if you could
So,
explain us into detail about that, how does that
so if you
work?
ask me, in BFSI group, it is the most difficult entities to audit is definitely banks. I mean, banks are huge, right?
Yes,
Uh, there are RBI regulations, then so many different products, the loans, derivatives, forex, then uh, in derivative itself, there is futures, option, forward agreement, investments of GSEC, bonds, T-bills, their valuation, their impairment, and on top of that, heavy compliances of RBI. So auditing bank is the most difficult in BFSI group. Now every entity has their own set of challenges and difficulties, but the banks are the most complex because they are huge. I mean,
absolutely.
they are huge in size. They are the balance sheet size that we need, and compliance and regulation requirements are pretty heavy in banks. And
I wanted to understand, that there are documentation gaps, there are control failures, there are tax issues, there are regulatory non-compliances also. So,
There's a
what is more,
common issue across any entity, be it BFSI or non-BFSI, is always the internal financial control gaps, which is identified by the auditors. They have challenges in that. That is the most common thing. Then frequent manual intervention, then compliance regulatory, compliances are not followed. These are some of the red flags. Then heavy suspense account balances, then late reconciliation by by the entity or last minute kind of thing. And more precisely, uh, what auditors red flag, I mean, what they consider the red flags are basically transactions with the related party. This is something now has become, it was always been, but now it has heavily, related party transactions are heavily scrutinized and needs to be audited at 100%. Like the recent, the recent case of Rajesh Exports, which has been, scrutinized by SEBI.
yes,
And if you're aware, heavy orders are passed and there are a lot of speculations. However, nothing, final orders are passed, but again, everything revolve around the related parties. So for me, related party transactions, then suspense accounts, then internal controls are very important. If they are not in place, then it becomes a little difficult. So these are the key issues which and the red flags which generally an auditor see when they plan their audit. See, honestly speaking, it's been almost now 6 years, 7 years. I have not been part of the audit. Uh, Somewhere in this, prior to that, I was working with KPMG, and thereafter now for 7 years I'm working in industry. So I'm more on the other side of the table, not as an auditor. But I can sense out what does the auditor looks for when I am a financial controller. I can sense out their risk and how do I provide the comfort so that the audit goes smooth. So I know that the way, but if I cannot really comment on the more expertise side on audit background.
Correct. PwC is talking about AI and audits, right? So how and where can AI reduce the BFSI efforts the most?
See, not just BFSI, I would say PwC looks after for overall audit division, be it BFSI as well as non-BFSI. So the purpose of AI is to automate the human efforts. Instead of doing sampling for loans, can have 100% verification calculation for loans as well as fixed deposit, term deposit. So this helps better coverage for the auditor, which provides better comfort, more insight, more analytical data, manual intervention, manual checking gets reduced so that they can now auditor can precisely spend more time on doing analytical evaluation for balance sheet and P&L rather than just ticking the box and doing the documentation, and they can understand the business why why there are loans are provided heavily compared to prior years, what are the risky lending, where is the credit risk. So more from the analytical point of view and advisory point of view, statutory auditor, they look after it because now AI they have already replaced a lot of checking and journal testing, 100% covering the 100% population. So this is how AI support and the statutory auditor, not the statutory auditor. In fact, even we are now using AI tools like Copilot to make the calculation or prepare any kind of PowerPoint presentation for board deck or draft uh, mails for our day-to-day purposes. So it makes work more efficient and human efforts get reduced so that they can work for something more innovative and understand more about the business.
Absolutely. So in your experience, what are a few common mistakes companies make before the auditor is in, or the audit has begun? What are the few mistakes where you see on both the sides, the audit part and as an auditor also?
So I think planning of audit has always been the key for auditors, understanding the client's risk and initiating what needs to be done. Most important is planning. Thereafter, from the management side, I think if we are good enough at the internal controls, 90% of the audit is definitely taken care by the internal control itself. Then thereafter, of course, audit is just not an annual activity. We have to understand from the management point of view. Every month, basically, we substantiate the balance sheet. If we substantiate on every monthly basis, then by the year end, it's just a formality to provide certain documentation to auditor. All of a sudden, if try to document everything on the year end and try to provide data, it will be hell out of you. It's difficult, right? So from the management point of view, internal controls, heavy documentation, reconciliation should be done on a monthly basis as well as substantiation of the balance sheet. More of MIS reporting requires as to why this P&L movement to substantiate those balances. And of course, suspense account is something needs to be monitored. So these are the certain things in the BAU if you streamline from the management side. I mean, more from the financial controller point of view. I would not say management, from the finance side. So things will be taken care during the audit. And from audit perspective, I think their planning and planning is very important. So,
Correct. So when you are saying, the internal, the statutory and planning is important, the work has to be done quite before. So what if it is not done? What will happen? What will be the implications be? And, as a person coming from a position, what difference can you add on to solving the issue?
so see, if the internal controls are not in place, then it becomes difficult for auditors to provide comments on the IFC reporting. And also, then if there's control failure, let's say there's a control failure, there's no maker checker control, or if it is there, but it is partially for some part of the year, then there's substantive testing. They need to do a heavy substantive procedures and testing. It increases their workload and also doesn't provide much comfort on the overall financial numbers because no auditor can check 100% of the even smallest of the smallest entity. They won't be able to check. That's a fact. But because of AI now, they are good enough to coverage a 100% coverage. But again, auditor is an auditor because of the judgment that they apply while doing the audit. AI is more of, mechanical. They can review, you provide the comments. I mean, you provide the prompts. They can do the testing, required testing for you. But ultimately, it's the auditor's judgment as to decide if this is a particular transaction is material or non-material, depending on that. So, if there's no proper planning, it makes audit a little difficult as well to execute their plans and to provide better comfort. And as a management, we also uh, look after for auditors that what we cannot see from our eye, maybe a fresh eye, uh, they provide certain irregularities in our accounting or financial statement preparation level if they can provide some insight, and that's why they have the expertise than us, right? They are doing audit for different entities, for different sectors, for different within BFSI. They look after so many entities and different types of industry. So that gives us more comfort if they provide more irregularities to us, and we try to improvise ourselves every year and to match their expectations.
Is how do auditors balance check numbers with the understanding of the business behind those numbers?
Yeah, so say as, for in case of loans itself, if there's sudden spike, they need to understand the business as to why there is sudden increase in the loans being provided, to whom it is being provided. Is it a genuine transaction or just uh, transaction to get on the books, basically? So understanding of business is pretty important, and core of the transaction needs to be understood by the auditor. And to understand this, that's why AI looks after for regular vouching and verification work, and then thereafter they can understand more on the credit risk side.
Okay.
And that's why it's important that they understand the business cycle as to how this movement in the business on quarter basis, and why there's such movement happening in the balance sheet of the.
So how and what is the role of technology, you know, into making audits faster, cleaner, and more reliable today? are people in the fintech industry ready and open to technology, the new technologies which are coming, and what is that space? How is it here in
Be it
India as
fintech
a overall
or
country?
bank, yeah, so be it fintech or bank or NBFC, nowadays everything is almost fintech. The traditional way of accounting or running the business, the time has already gone. You need to move towards fintech. So all the financial products are accounted using the IT system. Now, as an auditor, basically what technology helps them to smoothen their audit is the AI, definitely. As I said, 100% coverage for loan instead of sampling. Journal testing work is done by them. Then any kind of contract, uh, instead of reading the entire contract, that can be done by the AI and provide the summarized form. The auditor can focus more on the analytical rather than traditional vouching verification work. And of course, more on the judgment side to evaluate if the provisions for bad loans and NPA has been done correctly or not. So in every way, AI helps to get the audit done faster because of all these merits which they have, and human efforts are reduced. And from the management side, even management is looking more towards AI, like we are using Copilot. Other many entities use other paid version of tablet or Python or Microsoft BI. So AI is a future. I mean, it won't take away job, but definitely reduce human efforts. The one who knows how to use it correctly, they will excel in their career and they will basically survive. All I can say.
Absolutely. So what lessons, from an auditor should founders, CFOs, and finance teams apply before their company scales from certain level to a certain level?
So lessons from whom?
What lessons from audit should founders, CFOs, the finance teams apply before their company scales?
Uh, from audit, I think one is definitely the CFO or the financial controller is to look after for the internal controls that they set up for each of the processes. It's working effectively, and they if they have their own internal audit team, so that they can substantiate the processes more on the control side. And from the audit perspective, whatever the findings that has been found out by the auditors, they can try to they need to comply for the next audit, and they can substantiate better financial controls and better documentation so that uh, heavy documentation, I won't say heavy, but monthly proper reconciliation, your month-end checks, then variance commentary, having a control on the P&L month-on-month basis, as well as on the balance sheet, substantiating the balance sheet balances. It helps management, financial controllers, I would say, to support audit in a more efficient way and to provide better comfort to auditors.
Okay. McKinsey generally has talked about that digital banking is becoming risky or is a risk. So has digitization reduced audit gaps or created new risks?
See, it has definitely reduced the manual risk. Manual errors has been reduced, but now everything is digital. we are not that much, this generation definitely understand how the digital platform works, but if you ask my parents, they must not be knowing as much as what is required to be known. So there is always a risk. There is new risk. I mean, if there is digitalization, then there are people who are smart enough to create risk for the cyber security, then data integrity. There are so many frauds happening by sending a link on the WhatsApp. Your WhatsApp get hacked, then your passwords and everything. They cloud your phone and get all the details which is stored on your phone to their platform. OTPs can be gone within a seconds and they can make the transaction. So such kind of risks are there. But then, as I said, I mean, any new technology comes with pros and cons. So if there are pros, there will be cons. But
Correct.
at the same time, we need to learn, and there are steps been taken to reduce such kind of risk, and so that they can, eliminate this risk from the system. It's not 100%, but definitely, even my phone has uh, hacked by a hacker. They have sent me some KPI file, and accidentally I just downloaded it, and out of nowhere, that's got hacked. I have to do a lot of I have to do a FIR because my WhatsApp was hacked, and it has gone to some other person, and that guy was sending messages across all my contacts that,
Yes, that has happened.
I'm in trouble. Can you send me X amount of money? And nobody is able to call me because all calls are getting diverted to that. So people
Correct.
have also sent money to that person. And then I have to make FIR in the police and I have to go to the cyber crime, get my phone completely, change my SIM first, and then my phone uh, I need to change everything.
Absolutely.
So there are ways, but I think that's a lesson which I learned that you should not be downloading anything. If anyone sends you randomly, just
Yes,
do not. It's very risky now.
correct. Sachin, one last question into this segment is looking ahead. When you look into the coming 1 year only, how do you see technology reshaping the fintech industry overall? What are a few things which you see prominent that this is going to get implemented into the coming 1 or 2 years into India?
So if you ask me what would be the future of AI and the automation in audit, basically, right?
Yes,
It is. I can say that there would be a continuous audit real-time basis within the organization, more of internal audit, and AI will help to detect anomaly more faster than we can even imagine. And of course, less sampling, manual sampling process. We'll have more focus on judgment and interpretation. So auditors will, move from the traditional checkers to more of risk advisors because see, you understand, right? I mean, if I am the financial controller for my entity, I know more about my entity, or I can learn from my peers or by attending some kind of training. But when auditors come, they come with doing audit for different 10 entities and they have seen those entities and they can advise me more from the risk point of view. That becomes really helpful and it becomes an add-on apart from, traditional form of verification of financial statement.
okay. Now we'll move on to the next segment. That's the rapid fire round. I'll ask you a few questions and then you'll have to be very quick in answering. It can be one word or one sentence max.
Sure.
Statutory audit, internal audit, or tax audit, which is the toughest?
Statutory audit.
Documentation or data accuracy, which matters more in BFSI audits?
I think both, but documentation will help you to save when there's heavy inspection. Accuracy cannot be avoided, but you need to be accurate up to 95%. That is fine. But if documentation has to be 101%. So yes, documentation.
Which is tougher to audits, banks, NBFCs, insurers, or fintech?
Definitely banks, I mean, because
Definitely.
of scale and regulations.
Yes. AI in audit, is it an opportunity or a risk?
It's an opportunity. I mean, it makes your work simpler.
One audit red flag you should never ignore.
Uh, any kind of manual overrides in the system or failure of any control related part. There are too many, but definitely if you ask me one, then manual overrides in systems.
Correct. Okay. We'll move on to the next segment. You'll have to answer only one question into 30 seconds. How do you see AI entering the audit room for statutory, internal, and tax audits across BFSI?
I mean, this is pretty straightforward. It helps for 100% data verification, removes the sampling efforts, manual sampling. Then it flags the anomalies. Uh, Detection risk has been reduced because it's easy for them to detect. Then it helps to assist the risk assessment as well. So auditors will spend less time on the checking and they will spend more time on analyzing the business cycles and business environment and more on the advising client as well.
Thank you, Sachin, for your time and joining us today on the podcast.
Absolutely, it was my pleasure to have a word with you.
So, everyone, let's stay connected and let's continue to explore and understand the evolving world of fintech. And please message us or comment us below if you have any questions related to the topic. Sachin or I will definitely revert back to you. That was Sachin sharing his insights on today's podcast. We will meet in the next episode next time. Until then, stay curious, stay inspired, and keep exploring.